For the Street, I'm Jill Malandrino from the NASDAQ market site with Trade Alerts, Henry Schwartz, and featured writer at Options Profits. Let's talk about some unusual option activity because we've seen a lot of it, particularly in LEAP.
Yeah, LEAP was one of those examples that it just kind of blows your mind. It's so clear cut.
Right.
It was a late Friday. It was last Friday the 12th. And they're actually, going back a few more days, there was a little bit of earlier rumblings in calls a couple days leading into Friday. But Friday, at the end of the day, in the last 15 minutes, we saw about 3,000 calls trade. It's a $7 stock.
Right.
These were the July 9s. Okay, so they had a week to go. They traded for 9 cents. About 1,200 of them. They were all opening. A few other strikes traded as well. About 20 minutes after the close, I get a phone call from a Reuters reporter. And she says, "Did you see LEAP's getting taken out? And it's double the stock price."
Right.
And I was like, no way. You know, it's in some of these, it's kind of clear-cut, you know, criminal activity. In other ones, you know, it's people with very sophisticated news reading algos. And you know, you gotta realize, you know, somebody canceling, you know, attendance at a conference can, you know, kind of tip people off. Somebody just organizing a press conference. So I'm not sure. I haven't seen any reports that the SEC is getting into the LEAP volume. Well,
it's quite interesting because the SEC and other regulatory agencies have made such a giant push over the past 10, 15 years to level the playing field and make it fair for all investors, particularly retail investors, right? So then we see things that happen blatantly all the time now between all the high-frequency traders, all of this unusual but very clear options activity, and nothing seems to be done about it, and it's right there for them.
It's very challenging, not just from the fact that you got 12 markets, well, 12 soon, options exchanges. You have information moving so fast. You know, think about 15 years ago, you know, it took information a while to get around. So, you know, nowadays, you know, whether it's Twitter or, you know, any other, you know, social media, anything, stuff gets around instantly. And so, you know, I think it's a serious battle. I mean, you know, overseas there's, you know, securities rules that actually don't make insider trading illegal. And there, you know, that was one of the issues. I worked in Germany for a while, and you know, the rules in Germany really didn't make insider trading illegal, with the concept being that it's very hard to police, and that, you know what, that information needs to get into the stock price. So, you know, trying to say, oh well, don't release any news until after 4 o'clock. You know, mistakes happen. People accidentally release, you know, earnings. We've seen that every once in a while.
Well, it seems to happen more and more. But it's just, it's amazing to me because as market participants, we have no choice but to evolve with the markets as per regulators. But I feel like the regulation hasn't caught up with it as we've been expected to. But that's a conversation for another time. Let's talk about some unusual options activity going into earnings, particularly the XLK as tech earnings heats up at the end of the week.
Right. So you know, IBM has earnings after the close today, and you know, a lot of more kind of more volatile tech names actually are next week. You know, you have Netflix, you have Apple coming up. So the XLK volume has been picking up today. It's calls. It really seems to be an upside play. I mean, most of these earnings have been better than expected. You know, so what we're getting, you know, given, you know, granted it's kind of high quality blue chip names that have reported, Citi and BAC, Wells Fargo, JP Morgan, they've all kind of bounced a little bit. You know, Goldman was the exception, and that one really had a pretty strong run up into earnings, and actually was up in the morning and then closed down on the day. So, you know, at the moment, it's the tide is really, you know, the fear and greed, and we're back kind of in the greed. It was fear 2 weeks ago. And, you know, as this market starts to adapt to, you know, the currently, and, you know, as of today, and it could change, you know, Bernanke's speaking today, so it could change right now. But we're back into a greed mode, which is people are, you know, trailing, you know, we're at all-time highs. So if you're not fully invested, you're kicking yourself. And, you know, we're seeing people start to chase yield, and that's kind of scary, kind of interesting. You know, if we see a hard sell-off, 5–10% pullback, you know, it doesn't take that. It takes, you know, a 1% move down, and then all of a sudden we go back into fear.
Right. Well, that's exactly what we saw going up into May when we had that change in momentum in June, right? And that's exactly what we're seeing now again, where whether you're a classic technician or a classic fundamentalist, it really is kind of out the window, which is so frustrating for people who aren't long this market. But it is what it is until it isn't anymore. And it's been a really tough trend to fight. Thank you very much.
Okay. Thanks, Jill.